look at the world through a USD denominated lens and you never look out from that world, those glasses, well, markets look way more pricey than they are. The S&P 500 is up 15% year to date USD denominated. But if you look at gold, which is real money, it's 52% year to date. So if you look at the stock market through a way more honest lens, it's actually pretty damn paltry. It's actually pretty damn paltry performance. The stock market, filled with what are supposed to be the most productive assets in the world, is underperforming a shiny rock. Even if you compare the fake money USD to other forms of fake money like the euro, well, even then the USD is down in excess of 10%. So when people say, look, the stock market, it's up so much, it's unsustainable, well, they definitely haven't looked at the value of what the stock market is denominated in. And if you actually look at the price of the S&P 500 denominated in gold, which again is real money, we are actually way below internet bubble levels, right? Look, folks, people are right. There's a big crash coming. Unfortunately, that crash is in the USD, and it's been happening for years. So sure, when it comes to the stock market, look at history. Every single uptrend has breathing cycles. Every single uptrend has corrections. It has crashes. And every single uptrend has periods where you get these massive amounts of euphoria that can last for very long periods of time. If you don't have a crystal ball and you can't predict these things, the best way to play it is to buy good assets at good prices and slowly do that over many years. Lots and lots of folks play the game of holding cash aimlessly. They fear the stock market. They don't realize that the 100-year trend of the stock market has been straight up, and the 100-year trend of the US dollar has been straight down. They also don't realize that the crash of the US dollar is only going to get worse as the Fed lowers rates. Okay, let's talk stocks. So we got to start with number 4, AMD, Advanced Micro Devices. So I've been a huge proponent of AMD all year. I laid out earlier this year that I believe AMD will get to $958 a share by 2030, which would put it at $1.54 trillion in market cap, which is a far cry, by the way, from Nvidia's valuation today at $4.57 billion. And in my opinion, totally reasonable. I'm saying that AMD could get to a fraction of Nvidia's current market cap by 2030. Yet a lot of people said this was too wacky. Anyways, I don't think it's wacky, and I think that AMD is going to be advanced money dispenser, not advanced money destroyer. Now, we've made the comparison that AMD is getting a huge amount of demand from the overflow of Nvidia, and if you go to December 2024, we actually alerted AMD calls expire in 2026 with the prediction that AMD will blow through $200 a share, and here we are, blown through there. Very beautiful. And now AMD is right around all-time highs. So big congratulations to folks who believed in this one. So what happened? Well, as you've heard, OpenAI and AMD made a massive deal, with AMD essentially offering OpenAI 10% of the company in said strategic deal. And today, NVIDIA's Jensen Huang came out and called this a clever deal. Very clever. Why was this so clever? Well, the benefit for AMD offering 10% of the company is now the stock is up 40%. There's hundreds of billions of dollars of extra revenue coming in future years, and there's a lot of credibility and validation. How does AMD directly benefit from this deal? Well, I mean, having OpenAI, a leading AI firm, commit to amounts of AMD chips signals that AMD's hardware and roadmap are competitive in the AI infrastructure arms race. It's a major vote of confidence. There's also, of course, massive revenue upside. The figures being cited, potentially $100+ billion over years, are large enough to materially move AMD's valuation and earnings expectations. Strategic alignment and skin in the game, because OpenAI, folks, because OpenAI gets warrants that vest on milestones, the interests of OpenAI and AMD are more tightly aligned. If OpenAI succeeds in deploying more compute, AMD benefits directly. That alignment is very attractive to markets. There's also diversification versus Nvidia. Nvidia has long been dominant in AI GPUs. This deal shows that AMD might become a more serious alternative or complement in the ecosystem, which can shift how investors view AMD's future growth potential. Now, I've long believed that there's no way that Nvidia is going to be allowed to be a monopoly. Nvidia wants to have competition because they don't want to fall under the whole monopoly rules and antitrust guidelines, which in large part is why Nvidia does like to throw tons of money around to help build out other competitors in the segment. The AI melt-up is largely a symbiotic melt-up of about 10 different companies that are all helping each other and trying to grow themselves and in turn grow each other. There's also momentum and technical catalysts, as we've been talking about pretty much all year. The stock has had a lot of support on the chart for continued running, and obviously this catalyst just completely blew through anything that the natural chart progression would have been able to do on its own. So anyways, big fat shout out to folks who believed in AMD, and this is yet another example of doing the work, putting your head down, and getting lucky on purpose. Okay, next, number 3, IREN. So a month ago, we made a video, a beautiful video, I should say, breaking down the case to buy IREN stock at $31, and it's now more than doubled at highs. Our alerted calls on September 8th sent to Discord members have done way better. Very beautiful job, but this is the case that we laid out for them back then. So my case for IREN calls: this company has evolved from a renewable powered Bitcoin miner into an emerging player in high performance computing and AI infrastructure. The company was recently named an NVIDIA partner, a major credibility boost that positions it to capitalize on the exponential demand for GPU hosting and AI driven data center services. With Bitcoin providing a volatile but liquid funding base, IREN is building optionality. It can benefit from both crypto upcycles and from structural AI data center growth. So anyways, shout out to folks who believed in IREN, and we continue to see upside here, and we'll continue to keep you posted. Okay, number 2, PayPal. So I believe PayPal is screaming buy right now, and we just alerted a new round of calls on it as well. So what's the case for PayPal, the lovely pay of the pal? This company is now a streamlined organization under the leadership of Alex Chriss. He's been focusing on efficiency and profitability, which means higher free cash flow yield. There's been a valuation reset. I mean, the stock is trading near multi-year lows, 11 to 12x forward earnings, despite strong balance sheets and a very, very sticky user base. In terms of consumer engagement, I mean, PayPal and Venmo remain top of wallet apps for 400 plus million users. Improved user interface and rewards integration could reaccelerate usage. And then there's checkout innovation. The new fast line one-click checkout aims to rival Apple Pay / Shop Pay, restoring PayPal's mode in e-commerce. And then you've got buybacks and capital return. You have $5 billion in annual buyback program, and robust cash generation provides steady support for EPS growth. Okay, next, TeraWulf, WULF. So Wolf has been long known as a Bitcoin miner, but they are aggressively expanding their strategy to include AI landlording, which of course, as you know, is a lucrative business. And I've had them as one of the 4 small boats in the rising tide of data centers for a while, and we've talked about this stock from time to time. But look, I mean, the case with this company is that it spent years optimizing cheap, sustainable power for Bitcoin mining, and that same advantage is now being weaponized for something much, much bigger. Their Lake Mariner facility in New York and Nautilus facility in Pennsylvania are already liquid-cooled, grid-stable, and directly tied into low-cost nuclear and hydro energy sources. Those traits, cheap, clean, and scalable energy, happen to be exactly what the AI world is starving for right now. So instead of just mining Bitcoin, Wolf's turning that infrastructure into AI-ready data centers purpose-built for GPU hosting, HPC training, and co-location. They're signing multi-year high-margin hosting contracts that stretch well beyond the short-term swings of crypto. In other words, they're moving from speculative volatility to high-margin recurring infrastructure-grade revenue. And they just recently got the backing from none other than Google. Google's involvement de-risks them quite a lot. De-risks their revenue and their cost of capital substantially. It's going to be a lot easier for them to get more contracts, better financing, and get more overall trust. Now, what are the upsides actually for Google in partnering with them? Why would they even want to partner with them and take a stake in them? This helps Google secure premium AI / HPC infrastructure capacity. TeraWulf is building very specific facilities tailored for high performance computing and AI workloads, liquid cooled, high density, resilient infrastructure. And by tying itself to that capacity, Google ensures access to large scalable compute that meets its performance and reliability needs. It also mitigates project / counterparty risk. Google is putting up a backstop on hundreds of millions and now billions worth of lease obligations tied to FluidStack's contracts with TeraWulf, effectively underwriting the risk of lease defaults or financing shortfalls. And there's also strategic alignment and optional upside via equity exposure. I mean, rather than just being a tenant or customer, Google is gaining equity via warrants, share stakes in TeraWulf, and this gives Google a lot of upside if TeraWulf's shift is successful and aligns their incentives. So something to...
All right, guys, if my computer doesn't crash, it's going to be a miracle. So, yeah, if you missed NVTS, this stock is next. Now, the thing with that is, blah, 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 NVIDIA architecture update. This is on the, whatever that is. Today is the 16, 15, 14, 13. Yeah. They announced a product update for NVIDIA's computing platform. So, normally a product update wouldn't move like that, but when it's related to NVIDIA, does get some attention. So as soon as ChatGPT loads here, Ryan was asking about AI, tech, or energy. And I was just saying on YouTube, I don't really think about it that way as far as top sector right now. I just look for a setup that looks easy to get into. So there are some sectors that are doing okay, but it's just arguing with ChatGPT here. Here's a dealio. Like, they're all doing okay. It's just you can't really buy CEG up here. You can't buy, yeah, NVTS is completely unbuyable up here. You can't buy, so what was that? That's power. And then tech is like a little more slow moving, the big stuff, the mags. It's just all those kind of got hit with the Friday tariff scare. And then AI is also basically those companies, except it's also some of these crazy little companies, which you can't buy soon up here in BBAI. Maybe is kind of interesting down here. Kind of on a pullback situation, but yeah, don't just think like super broad AI, tech, energy, because they're so, the big companies are connected to the market. So you kind of want to, like, there are times to jump into NVIDIA, for example, but right now is not the time. So if things can load here, I'm going to jump into a little breakdown here on the one and only BMNR. This is Bitcoin, this is Ethereum, and yeah, this is the company. So, heyo. There is one stock that is about to move up in price, in my opinion. It is an Ethereum treasury. So Bitcoin liquidated whatever number, as millions of people on Friday who are on 25x. I think Coinbase was even offering 50x leverage now. So they learned their lesson, or they didn't, and just lost their money. Bitcoin went all the way down to about 100K per coin. It bounced up a bit and then still looked pretty weak. Now it looks like it's okay. Now that it's middle of the next week, you know, it's been 5 full days since that horror last Friday. Ethereum sort of doing the same thing as Bitcoin. That's usually the case. They're pretty close. Wasn't always the case. About a month ago, Ethereum had a breakout that Bitcoin didn't really follow. So this is an Ethereum treasury company. The ticker is BMNR, and the chairman of the board is Tom Lee, who is the, whatever his title is, chief talker at FundStrat. And he's all over the CNBCs of the world. People listen to him, and he has a lot of good things to say. Do you want to buy his Bitcoin treasury company that dilutes its shares, sells them to you in order to buy Ethereum? It's an Ethereum treasury company. Maybe when it actually sets up as a low risk, high reward setup. Let's look into what that actually means, why you would buy this instead of just buying an Ethereum ETF, and get going here. Not financial advice.
This is Sam Putnam.
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 So here's the dealio. Honestly, not even honestly, if you just watched these videos, here's what I told you. I told you that BMNR looked interesting on this day, right? And then what happened the next day? Absolutely crushed. Okay, 15% down. So what happened? Am I an idiot? Did I purposely tell you something that I didn't believe to be true? Or did the whole market fall on Friday, which pulled pretty much everything down with it based on Trump's comments about Chinese rare earth restrictions? Well, here's the deal now. Ethereum, Bitcoin all moved down like that. And now it looks like we might have a few days where we're starting to bottom out here. Bitcoin starting to look okay. And so, if they're going to turn up, companies like BMNR are going to turn up as well. Circle, the stablecoin USDT provider, Tether, also looks like it could turn up. So, are we just making a bet on the market, really? Not really. You can see the market is already up. So these companies more closely follow crypto, and we call crypto Ethereum and Bitcoin, right? Those are the two biggest cryptos. Always is weird to say that word, but people say it, so it's kind of fun to say. And if Ethereum starts to turn up like the market, then I think BMNR is bound to follow. MicroStrategy is the Bitcoin treasury, still looks pretty ugly down here. Would really need to change a character. But this is the initial treasury of crypto that led to the creation of all of these other treasuries. Now, you can say this is a really stupid idea for a company. You just hold crypto. Is that a company? Is that a holding entity? Is that a fund? Like, what is it? It's like, well, we can buy it through our normal broker. We don't need to worry about a crypto exchange going down, and there's sort of a level here shaping up. BMNR is the ticker, and if you're an intradaily person, and this doesn't give you a heart attack, seeing what a company does day to day, this is obviously when the market went down here, then you do kind of see this starts to look like it might be turning up. So it's not really like a super sold off bottom bouncer situation, because on the larger time frame we do sort of have a flaggish situation forming, and we have a big move that happened in the past to get people excited about what this company could do. Of course, Peter Thiel of Facebook early investor, first investor actually, fame, is also invested in BMNR. So with all that background, maybe you guys let me know in the comments, do you like it when I start with the chart, or do you like it when I start with the ChatGPT description of what the company does? I know ChatGPT, you might be like, that is so just sloppy. Like, why aren't you looking at the SEC filings, the investor relations, comments from the company, or hot takes? It's like, well, ChatGPT just pulls all that, so they're usually almost always right, and when they get a number wrong, it really doesn't often affect the stock price, because most people are not looking at every single number who buy the stock. Obviously, I'm certainly not, and I don't think even the professionals are. So look, Bitmine Immersion Technologies, Tom Lee is the face of it. Recently, they raised $250 million, and in doing that, they, of course, increased their number of shares. So that was at $4.50. So that's way, way, way back there. This is actually a while ago, back in June. Now, they're going to use that money to buy Ethereum. Tom Lee's the chairman of the board. They have 300,000 plus Ethereum, which is about 6 billion. So maybe that's a couple percent of the total Ethereum. Yeah, exactly that. And then they've added some more Ethereum. So this is pretty much the largest Ethereum treasury. If you think that's an important thing to be invested in, then this is it. they're trying to be the MicroStrategy for Ethereum. And people were famously, MicroStrategy has been the subject of a lot of scrutiny because no one thought you could really do that. Just turn a software as a service company and do an Ethereum into a Bitcoin treasury. But Saylor did it. Now these big, well-known, this is like the Sequoia, General Atlantic Founders Fund is in the conversation of Khosla Ventures, types of venture capital funds that also make investments in public entities. I don't actually know how many public entities Founders Fund invests in. I just know that the guy Thiel, right, and then one of his proteges, Joe Lonsdale, right, they were involved in a hedge fund. So they're not just a VC capital firm. I don't know why I have to log into Thinkorswim again to see the chart, but I guess I do. Thinkorswim, Schwab can sometimes be a little testy, but it's still the best software in my opinion. Are there some risks in basically dilution? Yes. And what other companies can we compare them to? Well, SBET. Coinbase is not a treasury. That's actually the exchange. Bit Digital. That's a lot of Ethereum. That's way less than BMNR. But look at these companies. So BTBT shaping up. It's not quite as interesting to me because while it is at a key level here, I kind of maybe would like something where I could buy it off of here. Maybe it'll come down again. And then SBET, this gaming company that holds Ethereum. This is, I don't know how interesting this is. Maybe it's shaping up, maybe it's not, but it's more so looks like something that has been going down. So that's pretty much the extent of my interest in those alternatives. And there's been a number of these, dime a dozen treasury companies. There was a Dogecoin treasury. So you really have to pick through the trash. A lot of these Bitcoin miners are transitioning into AI data center GPU providers to provide compute for the big machine learning companies like OpenAI. And I actually don't know of other companies taking a ton of compute that are startups, but I guess all of the other spin-offs from the OpenAI employees, the Mira Muratis, the Anthropic, Perplexity, the big ones that have big valuations already, they're going to be sort of propping up these Maras, these riots, these Irons. This is the company that had the partnership with Google. These are all ones to keep on watch, but they're not ones that are interesting right at this current moment, which is kind of the purpose of these ideas. Is I'm trying to focus on what's interesting right now, not what's already gone up and what might be interesting in a couple months. So they're all in the right circles. Iron with a 3-year multi-year cloud contract for NVIDIA chips. I was just looking down here to see the Google connection here, but I'm not sure I'm gonna see the right day. There's a lot of news wires that come out on these companies, and generally you just kind of, that's why I just kind of focus on the chart, and then after I see something that might be interesting, you know, a reclaim, then I start to look at news. So I have a lot of charts here, This is just the watch list I've got going on, but if I look up here, and if this thinkorswim loads, which it can be a little slow in the mornings and on weekends, you'll see there's a list of about a couple hundred companies, all these companies, 300-400 companies that are interesting at any one time. They just happen to move enough and also be above $1 billion market cap. At least that's what I like to look at, so you don't get caught in anything. There we go. You can see I've got sorted by market cap. So I've got the big ones on the top. We all know NVIDIA, Meta, and then down here I've got, the RCATs, the drone companies, the emerging themes that can make big moves. They can double in a couple months or less, but they also can be pretty speculative. I mean, this moves more than 10% a day, so can really get a little bit whipsawy, so you don't want to put more than 5% in those positions. But I talk about all of this in BMNR is the company. That's what I think is interesting as of the time of this video. And I talked about the levels for that, but I talk about all of this, the scanning and how I look for these companies and how I decide how to enter and sell rules, selling 10% up, holding the rest, trailing these averages. I talk about all of this in stockscommunity.com. You can try it out for just $25 for 7 days. You will get a free course member live stream during that time. And you can ask questions. I can answer them on the stream, or I just mean you don't have to show up to the stream. I'll still answer your questions and you'll see the recording in there. But that's what we got going on in there, sort of the best idea of the day rather than just a bunch of ideas. I personally think the less information, the better if it's good information, but I'm open to ideas, comments on how to convey that. If you like this video, like it. If you hit that subscribe. It's already a long enough video. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. I think Charlie was pretty much done over here, so maybe we can just head over for some Corey.
Navitas is absolutely exploding on news last night that is involving NVIDIA and their GAN chipsets. I told everyone here on YouTube to buy Navitas many times over the past few months, and now it is on an absolute tear. Told everyone in the Discord the exact same thing, which is why we are all holding a position of some sort in Navitas. I want to jump in and explain to you guys why this stock is still a buy right now and why it's stronger than ever, but we're also going to look at the technicals, fundamentals, of course the volatility, and there's
unless
risk
you're trying to make like $100 million investment
look at the chart,
for the long term,
more
like
than
Buffett.
10% of your portfolio into any one stock or any one sector. But we're going to dive right into Navitas and why this could be the best pure play in AI and servers going forward over the next 3 to 5 years with their GAN fast and their SiC and their 800 volt chipsets, which solve problems for servers and data centers like NVIDIA, as well as AMD and others like Microsoft and Meta. There is always going to be a need for servers going forward, most likely, almost for sure. And if this is the case, they solve problems. In life, we look for problems to solve and then we create solutions for them. Navitas has done this for servers and server data in big companies like Microsoft, Meta, AMD, and NVIDIA, and Google as well. And the partnerships are likely to continue expanding and growing with different companies as Navitas jumps into chipsets, as well as EV cars, batteries, and anything that is involving electronics. We are already seeing GAN fast charging equipment on Amazon for phones, computers, tablets. GAN fast and SiC is the way of the future, and Navitas is accelerating better than anyone in this niche market with very little competition. So let's go over the news, the technicals and fundamentals, and how we can secure a spot in Navitas even now at the current price. If you guys are confused by anything in this video, or maybe you just don't understand the technical analysis side of things, and maybe you want more trades just like this, and you want to make the money that you're seeing on the screen right there, those are the profits of my students in Discord. We have trades very similar to Navitas every single week, and sometimes every single day in the Discord, depending on dark pool data. We made $25,000 to $50,000 or more in Tempest, Snowflake, Oracle,
does have some great
Meta,
results.
Microsoft.
I don't like
List goes on.
options
I have
as
students that
much
are printing right now on other stocks, even though
because
the
you
market
can
is
also
volatile.
lose
There's
money.
always something going on, and I know exactly what data to look for. So if you guys are confused, you want to learn, maybe you don't know where to begin, the link to get started is in the information box below. Let's dive right into Navitas. You can see how Navitas has just exploded up in the day yesterday, but really exploded at 4 p.m. on some most recent news, reaching highs of $14.30. If you had got in when I originally called this stock out back around $5 or even at $5.50, you have almost tripled your money in 3 months. And if you got into Applied Digital, well, you pretty much 600%, 6x your money on that trade. And if you got into any of my other picks, you made the same amount of money. 4x on SoFi, 6x on SoundHound, and like a 10x on Robinhood and a 20x on Palantir. The list goes on and on. There's even like a 2.5, almost 3x on Wayfair and Affirm. And there's way more trades than that, but that's just right off the top. I gave my Discord a trade on Plug. We're already up 50 cents on that. Call options are up 20% as well. Many other trades, but Navitas is just another one of my picks that has absolutely exploded. So we're going to look at why this is happening, and it looks like it's building a lot of support here in the 12 to 12.50 range.
I think it's happening because they put out news about their semiconductors that help NVIDIA GPUs. They're optimized for NVIDIA GPUs. Now, here's the dealio, guys. What I really have to figure out is, how do I have my computer not crash when I'm finding out all this information? Claude's okay. I should probably be using Meta as well, although I have to sign up for that. Or sign in through my Meta account, which is actually fine. That's not a big deal. Ryan, you have option calls on BMNR, Intel, Lithium America, NAK, and TMC. I was in Snap, but I just took profits a few days ago. QS, the battery play, has been my best performer this year. Yeah, I mean, if you're comfortable with options, then you're comfortable with them. I think over a long period of time, it's extremely rare to see excellent performance on those. I'm not super familiar. Is NAK, is that naked? What is NAK? What is this company? Oh, this is a mineral company. So this is like a rare earth theme. And then 2100 mile access road to this mining district for Trump. And then TMC is the metals company. So you definitely like the metals. So that was definitely smart. And all those companies, to your point, Ryan, Intel being the biggest one, but I don't know if BMNR had options or has options. If we look in here, I'm not going to look into it, but you can see the options chain on the Schwab, and you can also buy options on a lot of these. They're not tiny companies, but they're not big companies, so there can be some mispricings there. So what I'm looking for right now is open door. This is the info. Do you look at the options flow, or do you just look, and if you want to buy shares, then you check the prices? God, my brain is working very slowly this morning. Okay, well, let's jump into another little video here, and then we'll just call it for a bit. So here we go. There's one stock that is undervalued right now, ready to move up, low risk, everything you like as an investor. It is a basically startup. I mean, it's on the NASDAQ, so it's tradable, obviously. It is Open Door, OPEN, the recent euphoric company, the Eric Jackson, couple $1 million hedge fund manager, public figure, you know, the apple of his eye. This company has gone wild. It came down a little bit. It started to go sideways. Looks like it could be another leg opportunity. Sometimes with these, you have to sort of just back away when everyone's talking about them, because that can start to signal a top, and then look for another opportunity to get back in, which I think is right now. So that's why I'm making this video. It's not financial advice. Let's look at Open Door.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's the chart. You can see it did come down a little bit on that market move on Friday. I've been talking about this market move on Friday a lot because what composes the market? All these stocks. So of course a lot of them moved down as well. Open Door was already getting pretty extremely euphoric from 2 to 10. Okay, but more recently from 4 to 10, 4 to 8, whatever, came back, sort of surfed as riding this 20-day moving average. This is interesting too, this 50-day moving average. Do like to look at the moving averages. I'm not a super like Fibonacci thing. That doesn't mean anything to me. Volume definitely means something to me. That's the actual buyers. And then the price agreement, you know, when the stock price just goes sideways, that means something to me as well. Especially when there's a level over here where there was buying over that level in the past, so that could happen again. So that's enough a chart to just kick us off. I don't want to get stuck in that too much, but while I'm waiting for the ChatGPT to pull up and load, this is essentially in sympathy, or OfferPad is a sympathy to it. OfferPad is not as prestigious, you could say, as Open Door. Open Door is the Khosla Ventures, the Keith Raboy, all the big venture capital investors are in Open Door. As the former Shopify COO. So OfferPad never really materialized. This just got way too choppy. And even down here, maybe there's a level here, but when something just starts to roll over like that and you have earnings coming up in a couple weeks, it's just not that interesting. So Open Door still seems like not only the leader, but also the one that's most interesting to take a look at. Now, here's ChatGPT. You know, my favorite R2D2, I guess. These big companies are, of course, what Open Door is trying to become. But if we look at them, they don't look like something you necessarily want to buy right now. That's Zillow. And then Redfin, I wouldn't say is top of this list either. Moves enough, above 5% per day, but it's sort of stair-stepping up. A lot of wicks, a little bit gappy. Maybe it sort of levels off here, but it just seems pretty choppy to me. This doesn't look like, some of these other companies, big companies of this size. They just trade a lot. I mean, this is an example of one that trades the smoothest, App 11. Pretty smooth there, and then extremely smooth here. But even ones that are equally sort of choppy, wicky looking, and by wick I mean when you look at these little like candle wicks, like these are called candles, right? And then they have these long lines on either side. So there's just a lot of lines on either side, which means when you look at it intraday, it just goes up, down, up, down, up, down, up, down, up, down, which makes it very difficult to get positioned in it. As compared to an App 11, which is a little smoother, aside from obviously the big market drop day. So Opendoor is the stock. It looks relatively smooth. Have a level to buy off of here. And if we take a look at some info about what they got going on, this is the star of the show right now. Former Shopify COO, now the CEO. He's definitely been saying the right things. It's a good interview of him on the 20 VC with Harry Stebbings. And we don't have to look at the government shutdown. My gosh, just random recent news. People are talking a lot about this over the past couple of weeks. It really doesn't matter for the stock market. I mean, obviously what happened on Friday had nothing to do with the shutdown. It was about Trump's rare earth comment. And also, yeah, you won't get to see certain data come out because they're shut down, but very few major market decisions are made solely on that data anyway. So and people often say that data is wrong. Sometimes they're not so happy with what they say is the jobs report or the, what traders are buying. They have some data about that from the commodities, or whatever it's called, the commitment of traders info. I don't know exactly how that's related to the government, but it is. Here's the deal, guys. All we really have to say about Opendoor is it still interesting? I think it is. There's no information that's come out that's been saying that this sort of future potential billionaire unicorn is no longer in the running with Zillow and Redfin. We already saw that its peer, OfferPad, isn't doing so hot. And so if you look at recent news for Opendoor over the past month, there's really not anything too fresh. I'm not surprised. I mean, sure, they're going to report results like everyone else at the end of October, early November. Sure, there's Wall Street bets buzz about this company because it went from 2 to 10 at 5x in just a month back in August. And besides that, I mean, it's really easy to just get lost in this noise. But none of this really matters. Majority of it doesn't even involve anything material to Opendoor. Occasionally you can see something like a executive buying and selling shares through a Form 4. This is Eric Wu. He's on the board. He bought a couple 100,000 shares at $665, and that came out in late September. So $665, somewhere in here, and now we're above that level. So if the if the executive is buying shares, that's good. I don't know exactly what he does, but I think he's pretty high up there. So as long as there's no red flags for this company, I don't see a reason not to take a look at it. Sometimes there's also pieces of info that are a little misleading, like Jane Street is a high frequency trading company. So if they have a 6% stake, I don't know that that means anything interesting, given that they may have already sold that stake because they trade so frequently. So if there's no game-changing information, besides, sure, it moves a little bit on some larger real estate market moves, but if we look back at, late September was the rate cuts, right? So somewhere in here, Jerome Powell announced a 25 basis point cut, which was expected. Everyone was expecting that. So that was supposed to, everyone was saying, help these real estate companies and help the lending companies like Lending Club and Rocket Mortgage. And it really didn't. Like, that was already baked in. So they just sort of sold off or went sideways and then sold off, So as much as it's interesting to talk about macro because it feels like you've figured out the secret code, or, it's info that's applicable to everyone, so it's easy to talk about, it's not actually helpful, in my opinion, and 99% of cases. What's helpful is a clear line. What's helpful is knowing there's been buzz about this and now it's cooling off. Not that it's recently cooling off, but it's cooled off, so now it has an opportunity for another leg up. Don't want to hold into earnings, but Open Door is definitely interesting, and it never hurts to have. He was the CEO. Okay, so he's the co-founder. That's why I was a little sort of just forgetting what he was up to, because the Shopify COO took over as CEO. So he bought some shares, co-founder bought some shares at a price slightly below where it's at a couple weeks ago. Sounds good to me. Chart looks good. We looked at the levels. It's Open Door. I think that's a stock to look at right now. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to get the best stock idea of the day, which I'm going to drop that in the Discord right now, actually, head over to stockscommunity.com. You can try it out for $25 for 7 days. I'm not always right. I'm actually often wrong, as are the best hedge funds in the world, the best investors in the world. But I really pay attention to risk reward. So when I'm wrong, I'm not wrong a lot. And when I'm right, I think there's an opportunity to hold for big 15, 20, 50% sometimes moves on some of these smaller stocks. Hope that was helpful. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam